Thank you, Dan. I appreciate the opportunity to give an early January presentation to you folks. Certainly want to wish everyone a very happy new year before we get started. 2018, as far as we are concerned here at the Steady Trader and Blue Oak Advisors, should bring about a few surprises like every year usually does. We do think that generally speaking, we should see the return or at least a mean reversion of volatility. And that is going to probably catch quite a few people by surprise. A lot of the hedge fund community and higher net worth folks and institutional people that I speak with on a daily basis, we are seeing a lot of consensus positioning, and we do think some of the larger issues out there this year could be around geopolitical things that you can't really price in. And if you really, I'm just going to give you guys a little bit of background here. I wasn't really necessarily preparing to say these couple things, but I think this is important for context. If you look at your average analyst or average trader on Wall Street nowadays, and I say the average, right, a lot of them haven't seen a bull market ever. There was a huge exodus of people being fired in the financial crisis, and a lot of people that they hired have now been only basically in the markets, in the equity markets in this case, since early 2009, maybe even a bit later on. So a lot of these people haven't seen a bear market. They don't know what that is. They don't know what volatility is. And we do think ultimately it's going to cause a lot of issues. Also structurally, or I guess structurally you could call that, a lot of people are piled into passive instruments from ETFs to indexing, which isn't bad per se long term. The problem is that the piling into those kind of assets at this point has reached extremes, and what that ultimately will lead to is basically a lot more volatility than one needs to have if you have a normal sort of corrective period. So I would think this year any sort of 5 to 10% moves to the downside, if we were to get them in, say, the S&P 500, are going to feel to a lot of people more like something like a 30 to 40% clip. And A, that's psychological, and B, it's just because a lot of people, again, are in passive things, but there are a lot of people also dramatically overexposed to a few large cap stocks that, quite frankly, at this point have an extraordinarily large part of the market. So and so having said all that, what we really need to focus on here is making sure that we have a strategy that we can use, because a lot of people are not going to know what to do with themselves when we see the return volatility. Because I mean, 2017 we had none, literally zero volatility. Certainly when it comes to the S&P 500. And so who in here is concerned that, by a show of hands, is anyone in here concerned that 2018 could maybe see a little bit more volatility than what we saw, say, over the last year or two? Anyone in here by show of hands? Yes, no, yeah, okay. So that's my base case. So with that, let's talk about the options credit spreads for monthly income. What does that mean? What is it all about? And let's just get right into it. Okay, just to give you guys a couple of words on my background, I've been like Dan so nicely said, I've worked both on the buy side and on the sell side. And from that perspective, it's allowed me to see a lot of different parts of Wall Street and work with some of the best traders and investors out there. And it's also allowed me to kind of see how these people actually make money. So one of the core strategies that I'll show you guys today is the one that I learned and ultimately fine-tuned on Wall Street as well. So to give you guys a little bit of background on all this, I think it's important for people to understand that it's crucial to keep it simple when it comes to trading and investing. A lot of people don't make money in the markets simply because they overcomplicate things. A lot of people look at too many conflicting data points. So it's really important to be able to eliminate that noise. And so the more straightforward your process is, the easier it's going to be for you to be able to stick to that process. What I found over the course of my career and some of the best people that I work with, the best professional traders have a simple, repeatable process. And it doesn't matter whether professionals in the sense that they work on Wall Street or they're at home. I do a lot of advising to high net worth people of all ages. You wouldn't believe how many of them are actually quite young, who use me for advisory and those kind of things, and they have a really straightforward but repeatable process to the markets, and that's ultimately what sets them aside from other people. Now, at the same time, I think it's important to understand what a great time in history we live in right now for the self-directed trader and investors. We have tools at our disposal we've never had before, and when I mean tools, I mean technological tools. We have very globally interconnected economies, social forces where people are on the go, which further pushes these technological forces to our use. You can see this person, for example, looks like that's the Bloomberg app on the iPad here to do all this stuff on the go. And if you have an approach that's repeatable and straightforward, you can do this from anywhere. Again, it doesn't mean you have to be spending your days at the pool looking at charts all day, not at all, but you can do it from everywhere. I live a very active life in the sense that I travel a lot. I see a lot of clients all the time. I'm very busy, and a lot of the execution that we do for the portfolios and all the research is actually done on the go, and so you can do that, but you have to, of course, have the right process and the right kind of approach in general. Now, lastly, this is important as well. I think a lot of people kind of forget what great an environment we live in terms of the tools you have at our disposal. ETFs, for example, have completely changed the landscape for the retail investor and, quite frankly, for institutional investors as well. And we no longer need to have all these different accounts open with different brokers and futures accounts, this and that, to trade different asset classes and even potentially even foreign markets or futures markets or options or stocks or whatever you want to invest or trade in. You can do most of that through ETFs. Now, of course, there are some ETFs that are better than others. For the most part, that's been a big blessing, certainly for myself and my clients from what I've seen over the past 20 years. In this business. Now, let me ask you guys a quick question. Does anyone here have a profit and loss curve that over time looks something like this? Say yes, or type any yes into the chat box. And what I mean by this is you make some money, then you lose it all again, or at least a lot of it. You make more money, you give it all back again, and so on and so forth. And let me say, there's absolutely no shame in that, because this is what most people's P&L curve looks like. In fact, even more people's P&L curve looks like this. And this is the people that want to be somewhat active in the market. This is what most people even look like. Quite frankly, it's arguable which P&L curve is more, let's say, frustrating. Is it this one where you make money, give it all back again, which is what most people do, or this one where you're just constantly losing money? What tends to happen is that the people who just constantly lose money, they're basically just gambling. Whereas the people up here, there's some sort of a process, but they're missing an important piece. And I think what we're going to talk about here over the next, let's call it 35, 40 minutes or so that's remaining, we'll talk about the process here to make sure that you go from this kind of a P&L curve to a P&L curve that's actually upward sloping, right? And by the way, it doesn't really matter whether you're making money for 2 days in a row or 2 months in a row, or a lot of times people make money for multiple years in a row in bull markets. But then once you have a bear market or at least an increased volatility environment, you get to see a lot of people giving back a lot of those gains, 50, 60, 70, 80%, sometimes even 100% plus of those gains. And that really, to me, kind of defeats the purpose of the entire process. So this is really important now. Let's talk about something really, really important, folks. And if I could ask you to just pay attention now, this is super important. Traders and investors, really of any time frame, they need to have some sort of an income. And this is something that I've seen not only for myself. My story is, I'll tell you, share in a second, very much goes by having to find this out the hard way. But also, this is something I've now seen for the past many years of now running my own company and managing money and doing all the advisory that we do, including the subscription things. So monthly income is crucial for traders and active investors. Why? Well, the reality is that not having monthly income is one of the biggest pain points for private traders and investors. Think about it for a second. Just literally close your eyes for 1 minute and think about how much more calmly would you trade or just be in general if you knew that someone was giving you whatever, $3, $4, $5, $6, $7, $8, $9, $10,000 at the end of every month, regardless of how you performed in the market. Think about that. How would that make you feel? Just think about it for a second, close your eyes, and think about that. You can really feel that good feeling coming over you right now, right? Think about how good that would feel. Well, the question is, what would you give to have that monthly income? What would you give for a strategy that would give you a steady source of income? And by the way, whether you have a part-time job or a full-time job, or maybe you're retired, a semi-retired, or you're soon to be retired, this is going to be a perfect strategy for you to implement on a steady basis without having to look at the computers all day. Let's continue. For example, when I used to work at a bank, I received a very big salary, and part of that is, of course, there's talent recruitment, but a lot of it's also because they didn't want you to overtrade. But it didn't really hit me how important it was to have that income until ultimately I set out on my own. I quit working at JP Morgan, started managing some money, and it didn't really hit home until then how important it was to have that income, not only just financially. For me personally, financially, it was okay, but the issue is psychological. So here's the big thing. Private investors and traders need regular income in order to get into and remain in the right frame of mind. Let me say that once again. This is really important. Private investors and traders, and again, this actually also holds true for a lot of institutional investors, but we're going to leave them out for a moment. They need this sort of steady income, we can call this monthly or quarterly, to get into and remain in the right state of mind. What does that mean? Stagnating or losing accounts lead to a couple things. Number one, they lead to a loss of confidence in the strategy that people apply, or even ultimately in themselves, which is really bad. And of course, that in turn leads to them breaking their rules, if they had any in the first place, and forcing trades or investments. And that's really kind of where things downward spiral. In other words, all of this, because there's no steady sort of income, leads to basically them blowing out all the rules, not sticking to any proper risk management anymore, assuming they have that in the first place, and of course taking on more risk and not adhering to stops. Like, for example, I'll give you an example. When I first started out, when I quit JP Morgan and started out managing some money, we had a side account that someone gave me just to trade futures, which I had never done professionally before in that style, and it really stressed me out. And it really started getting to the point where I was basically gambling. And now this was a very wealthy person's very small account that we were dealing with. So, you know, and we actually made money, more money than we lost in that futures account, in all the other stuff. But nonetheless, it was very, very stressful. And it was one of those things that if I had not had income being generated for that client, and certainly from also for myself, it would have been a situation where I could have really blown up in a big way. So that's just a little bit about my story there. Now, how does this sound? What I'm going to show you here for the remainder of the time is a low-stress, high-probability, and highly repeatable strategy. We're talking about something like 80 to 90% profitable trades. Now, let me just be very clear. I have a lot of reputation at risk here. I'm not going to tell you or promise you something unless it actually is true. All right? So I know this sounds a little bit crazy, but hear me out and you'll see why this works and how it works. And the time requirement for this strategy is about 1 hour per week. We're not talking about anything hectic. We're not day trading, God forbid. We're not doing anything like that. We're looking at the market for the primary purpose of generating income. So at the essence of this entire strategy is the fact that with this strategy, the market can go in either the desired direction that you wish it to go, maybe let's say making a bullish bet, in which case, of course, you'd make money if that, say, its stock would go higher. But it can also go just sideways, or it can even actually go against you to a decent degree, and you can actually still make money. Now, some of you might be saying, oh, I've heard this kind of stuff before, but I promise you what I'm going to show you in a minute is different than what probably anyone else will tell you about this kind of strategy. Just hear me out. So, at the core of this entire strategy is the idea of steep slopes that turn vertical. And you can see it here, and I'll show you a couple of charts. You can see we have some very steep slopes that ultimately have turned vertical. And when that happens, ultimately you get to a point of a point where in this case the greed or the fear of missing out essentially reaches an extreme. And then once you get to that point, there's really only one thing that a market can do, and that's either go sideways or consolidate lower. So we're looking at a very selective point in the markets or on charts or whatever you want to call it to put on these kinds of trades, right? Selectivity is how you make money in the market. That's what we found. Selectivity and then repeatedly executing in all the highly probable trades that we find. Conversely, you can of course have this whole thing happen on the downside as well. Let's see, in this case you had a sharp sell-off that led to a vertical drop in this stock, came into a lot of support, and ultimately of course this stock was very exhausted and began to bounce. And this sort of inflection point in around this area provides us a lot of opportunity. But a lot of people aren't patient. A lot of people put on trades somewhere along here or here or here and end up trying to catch a bottom and ultimately just get hurt a lot. And that's what we want to avoid, and you will avoid that if you do this strategy correctly. So let's talk about the concept of steep slopes when they turn vertical, but more, what does that actually mean? Well, a couple things happen when a slope or a chart, let's call it, goes from steep to essentially vertical, or they call it parabolic, I think is more the technical term that people like to use. Well, a couple things happen. Number one, the implied volatility of that underlying asset will tend to increase or at least become somewhat elevated. Investor greed or fear at the same time reaches extremes. And thirdly, the reward to risk for what we're going to, for right now, deem a counter trend trade become absolutely amazing. Here are some simple option selling statistics. And if you guys have heard of these statistics before, raise your hand. I'd be interested to know who's heard these kind of statistics before, because I think they give you guys a lot of perspective on what we're going to talk about. So the odds are very strongly in the favor of the option sellers. Anyone heard that before? Has anyone heard before that by becoming an option seller, the odds are dramatically inferior? Show of hands. Yes? Okay. Okay, I'm getting a bunch of yeses. Right. So now keep that in mind, but also keep in mind that even though that's a correct statistic, it is basically worthless unless you know how to actually use that. All right. So more than 75% of options tend to expire worthless. That basically means that the longer you were to hold your short options, the better the odds of success become. So options are a wasting asset, which is say that time is on the option seller side. It's a little thing called theta, which we'll talk about a little bit more later, right? But again, even though the statistic is correct, a lot of people misuse this statistic and think that they can just randomly go out and start selling options, and then they ultimately get burnt very badly because they're not doing it the proper way. And there's a lot of really bad information out there of people pitching and touting these weekly options income strategies, which to me and anyone that's ever traded money or been around the market for long enough, you just laugh at, because it's completely silly. So option sellers on average actually even win if the market is going against them. Now again, that's correct, but I'll show you why that's a bit of a misleading statement and why you have to do this in a very specific way to actually make money. Has anyone in here, does anyone here actually trade options by show of hands? And if you are trading options, or if you ever traded an option, have you ever sold an option? Let me ask you guys this as well. Yeah? Okay, so a couple people have sold options, some haven't. It doesn't matter whether you have or not, I'm just kind of trying to figure it out. Has anyone in here who has sold options ever had the experience that you have a few gainers and then you have like one loser that wipes everything out, or wipes a lot of it out? And by the way, that's not just the phenomena by selling options. That happens for most people in any type of trading or investing, right? And that's what I was trying to allude to before. But particularly when people sell these options, even though the statistics are actually dramatically in their favor of making money, they actually can't make money. Exactly. So like Dan, for example, and I see a bunch of other people typing in here that they've had this experience that when they're selling options, they're losing money. Exactly. So that's because you're not doing it right. And we're going to teach you here in just a second how it actually works. All right, because a lot of really bad information is being floated around out there. So I want you to write down these 4 steps. Number one, what we're going to do for the remainder of time, we're going to look through this step by step. Number one, you're going to look for steep slopes that have gone vertical and show us signs of exhaustion. I'll show you in a minute what that means. Maybe take a picture of this slide on your phone or write it down or whatever you want to do. Number two, we're then going to make sure that we have somewhat elevated implied volatility Again, I'll show you what that means in a minute. Thirdly, of course, we need to make sure liquidity in the options market is sufficient. And then 4, and this is the key, what we're going to be doing is we're going to be going out and selling out of the money call or put spreads 2 or more months out in the future. I'll show you a couple examples in just a second. And then, most important of all this is you rinse and repeat this on a monthly basis to build you an income stream. Okay, so there's about 3 different points in here that everyone that teaches this that I've ever come across doesn't do, and I'll show you what those 3 things are here over the next couple slides. Now again, let's quickly review before we go a bit deeper what it means to have this steep slope that's gone vertical. Well, again, we've had a steep rally, for example, in this case, and it's then gone vertical. When at the point where it goes vertical, you end up getting to a point where that stock or ETF, or it could be a futures contract, it could be a currency, it doesn't really matter what it is. It could be Bitcoin. Okay, I'm going to show you guys this in Bitcoin as well. It happens. It's the same idea. And I'm not a Bitcoin trader here per se, but I'll show you that the concept works in anything. I'll show you guys that in real time. The point is that at some point they get exhausted, and then what happens is that the asset in question will most likely either trot sideways for some time or go lower. If it's overbought, or if it's in the downside, of course, it'll then trot sideways or maybe go a little bit higher until it maybe goes lower again. Again, same thing here. You can see, for example, this is the chart of Netflix. You have a steep slope, and again, it goes vertical, this is something that happens all the time, but again, the key here is to be selective. Well, when slopes go vertical, then the upside is basically capped, all right? And if a slope goes vertical to the downside, ultimately the downside is floored. In other words, the asset will tend to stall in price when that happens, and this is really important. But funny enough, and you'll see this in a second, often enough, when you get to the point where something is really exhausted to the upside or the downside, it'll actually have a sharp mean reversion move that follows, which is kind of where you get the bonus windfall in all this. So let's have a look at a few example trades. Let's have a look at a chart of Facebook. And you can see here on the chart of Facebook that it has basically traded higher in a fairly nice pattern, and a few times here it kept going vertical. You see vertical move number 1, number 2, and number 3. What happened? Let me ask you guys, what has happened every single time after the stock went vertical? Can anyone tell me that? What happened after the stock went vertical? What happened? Right. It exhausted itself and stalled and ultimately even being reverted lower. Right? You see how that happens? Okay. So let me show you an actual example. And I'm going to bring up the chart here in real time. Let me just bring it down. I have a real chart on another screen. Let me just bring it down. So this is the real chart of Facebook. So given this entire concept, let's just take the chart of Facebook, and again, I'll show you the actual example so you guys can see that I'm not just making this up. So here's our basic, say, upward trending channel on Facebook, and let's go into a little bit more where the point I'm talking about. So on February 2nd, 2016, I sold what's called an April 125-130 call spread for a $1 credit. Now, if that sounds like a foreign language to you, don't worry, I'll enlighten you right now. But what happened on February 2nd is the stock had once again gone vertical. All right, and that's this point in time right here that you can see on the chart. Okay, and what happened here is that we got to an extreme overbought territory in the stock. So, but instead of making a bearish bet up here, I made a bet that the stock is simply not going to continue rising at its rate that it just rose. All right, so what we did is we sold an April 125-130 call. What does that mean? Okay, number one, we went out of the money, and I think this at the point in time the stock was trading around 115 bucks, and we sold a 125 call, which was at the time was about, let's call it about 8-9% out of the money. Okay, which is to say that the stock here didn't have to fall in order for me to make money. It could have gone sideways. It could even gone something 9% against me. Okay, you guys see that? Say yes if that makes sense to you so far. All right, so I'm not so contrary to making a bet that the stock now has to fall, in other words, shorting it. All I said that given the stock sharp rally within this already big uptrend, it is most likely not going to continue rallying at this rate. But not only that, I then said, listen, even if it does continue rally, it's probably just not going to rally another 9%. In other words, I can make money whether the stock goes lower, which in this case it happened to do, although it didn't have to, and I'll show you other examples later on where that didn't happen. It could have gone sideways, or it could have gone, like I said, actually more than 9% against me because I took it in a $1 credit. All right. Now that's one thing here. That's a really good, really interesting thing. Now the other thing is that, remember, this happened in February of 16. Notice that I didn't sell February options. I didn't sell March options. I didn't sell any silly weekly options. I sold April options. All right. That is like 3 months into the future. How many people do you know that ever told you to do that? Very few, because most people are greedy and giddy and they can't be patient. But what this does, this reduces and basically almost eliminates the chance of you having a blow up. All right. So let's see what happened in this trade. By February 8th, because in this case the stock tended to drop quite quickly, which I told you actually tends to happen quite a bit, although that's not what we need for it to happen. But by February 8th, a few days later, that spread reduced down to 24 cents, which means I managed to bag the difference, which is 76 cents or $76 per one time doing that trade. Okay, so again, if you're not privy to options too much, don't worry about it. What I'm trying to show you is an alternate way of how you can generate income in the market without constantly blowing out of the market, and having something steady that you can rely on a monthly, quarterly basis that is really the bedrock of your entire strategy. Okay, let's look at another example. Let's have a look at Tesla. What you can see here is that we did a trade in Tesla in, let's fast forward, February 16, 2016. We sold a June 120, 110 put spread for $2.25. What does that mean? So that means that the stock, for one, had a steep sell-off already. They went into vertical drop mode and ultimately got to a point where it was so exhausted as it started to reverse higher. Well, on February 16th, which was not me bottom picking, this was a few days later after we had a bottom, we had a reversal already, I managed to sell a June 120, 110 put spread. So I sold the 120 put, which was something like, let me quickly show you this on the real chart in Tesla. Again, this is February 2016. So I sold a 120 put, and I bought against that a protective put, which was at the 110 strike. So we were around here, February 16, which is, again, it's not bottom picking. We sold the 120 put, which at the time, was, let's call it 25% out of the money. So not only did the stock not have to rally, although it did, and again, I'll show you other examples where it didn't, and it doesn't matter, right? Because that's not what it has to do. It could have gone sideways, and folks, it could have gone another 25% or actually a bit more against me. Now that's number one. Number two, this is in February, and notice I'm using June options. I'm not selling February options, not selling March options, not April, not May. I'm selling June options, okay? And we're doing this for risk management purposes. Our goal here is not to hit home runs. We're trying to make income, an extra 2, 3, 4, 5, 6, 10 grand, whatever it is that you need to make a month or on a quarterly basis. And this is how you avoid the blowups, by doing going far out of the money, and number two, and picking your spots, and this is really key, and I'll show you how we do that in a minute. I'll show you how to find these opportunities. And number two, by giving yourself a lot of time. Doesn't mean you have to keep this trade on until June, but because let's see what happened, right? Now, again, in this case, the stock actually rallied, but it didn't have to. So by March 16th, that's 1 month later, that spread was reduced to 43 cents, which means that I could buy it back for $1.82, meaning I made $182 per one time doing this spread. Okay? Does that raise your hand if that makes sense so far, folks? Say aye. Yeah. Okay. So that's the basics. Let me show you another couple examples. So let's have a look at, for example, at LinkedIn. All right. Now, LinkedIn is one of those stocks that actually, when I did put on the trade, it didn't rally immediately. It just went sideways. So here's what we did. On February 8th, 2016, we sold an April 90.85 put spread, okay, for 95 cents. What does that mean? Well, once the stock had gone from a steep sell-off into a vertical drop mode, we went out another, I think in this case, again, we went 15% out of the money, so the stock could have fallen another 15%, and you could have still made money. Now, again, my case here was not that the stock was having to rally, so I didn't buy the stock. I simply said it's not going to continue falling at this rate, right? So we went at 15% of the money, I think, more or less, and we gave ourselves time, right? We used April options. So fast forward, by March 16th, that's about a month, whatever, 5 weeks later or so, the stock had basically just gone sideways. For the most part, as you can see, it went sideways. Spread was reduced to 43 cents. And near April options, that spread was reduced to basically worthless. Again, the stock didn't rally meaningfully, and it didn't fall apart. It just kind of went sideways, right? And that's a lot of times what tends to happen when you get to these points. But it's about being selective. So we got to keep the entire 95 cents or $95 in premium for income for the month of April. And this is the key, folks. Just perk up for a second if you're not paying attention. Come back to the screen. We did this in February. In February, we planned income for March in this case. Now, I could have taken profits, for April. I could have closed the trade in March, but we actually made money in April, so we're planning ahead. How many people have ever showed you that, right? Not many, I promise you, because that's not what's being taught. So the thing about this entire process is that you need to learn how to think like a pro. The objective is not to pick winners, okay, but rather to stay out of losers. It's the entire way, it's one of the core things that sets professionals apart from amateurs, right? And so doing this is going to ensure that winners basically take care of themselves. The profits basically take care of themselves. Of course, you can have some losing trades. Nothing's for sure except maybe death or taxes. But for the most part, this is a really, really high probability strategy that not only does it not require a massive amount of time, it's just a really high probability in the sense that you don't have to look at it the whole day. So let's review the core concept before I show you guys more examples and also more importantly how you can find these ideas. At the core of this all is that you're not making a bet on where the market is going, but you're making a bet on where it's most likely not going to be at a certain point in time in the future. Let me ask you this. If you buy a stock or an option or an ETF or a currency or commodity, what is the only way in which you can make money if you buy that asset? It has to go higher, right? Conversely, if you were to short that asset, it's got to go lower, right? But by doing this strategy, not only does it not have to go in that direction, it can go sideways, and it can, even if you do it correctly, and I'll show you how to find these trades in a second, it can actually go completely against you, and you can still make money. All right. Now, the other thing about this entire concept, and this is why it works, is you got to give yourself time. You have to give yourself time. Perfect timing is not necessary, and quite frankly, a lot of people, a lot of traders, a lot of investors fail because they don't give their ideas adequate time to work out. So you have to plan your income stream months in advance. How many people in here ever bought a stock at, say, whatever stock, maybe it was Apple or something, it doesn't matter what the name is. You bought it, you were hoping it's going to go to the upside, and then you got frustrated with it, you closed it, and sure enough, 2 weeks after you closed it, or maybe, for all I know, maybe 2 days or 2 hours after you closed it, it started moving. And you were no longer in a position of taking advantage of that move. Who's done that before? Raise your hand. I know I have, like 100 times. Okay, and that's the whole point of this exercise. This strategy will prevent you from doing that because time is in your side. You will no longer make that mistake. So let's look at this a little bit more closely in terms of some examples. I want you to think of these credit spreads as your regular income. This is like your primary strategy in the sense that anything else, any of your swing trading, or maybe you're doing a day trade or a long-term investment, whatever it is kind of your bonus, right? So the returns in trading and active investing are inevitably nonlinear. In other words, you're not going to be able to make exactly $500 a day or a week. It's just not how it works, which is why this strategy works, because we're giving ourselves time and we're planning ahead by going way out of the money, and we'll talk about that more in a second, and planning and selling these option spreads way out of the future. Who so far thinks this is helpful? Show your hand, and I'm showing you guys more examples here in just a second. Helpful, not helpful? All right, cool. Okay, so here's a couple more examples. So here's, for example, Tesla, and you can see these blue arrows appeared on the chart, and what that's telling us is that this stock was extremely overbought, giving us a beautiful opportunity to sell out of the money call spreads for income. Okay, stock rallied very steeply. Remember we talked about that steep rally when it goes vertical, steep rally and it goes vertical, right? Steep rally and it goes vertical. All right, and every time that happens, we have a beautiful opportunity to sell these out of the money call spreads in this case to generate income and plan that income in advance, right? And you're not going to have these nasty blow-ups. Remember, I asked you guys before, who in here has ever sold options and is not making money? If anyone here has ever traded options or sold options, you're not making money, it's because A, you're not giving yourself enough time, B, you're not being picky enough with the type of trades you need to do, and 3, you're not selling the right options. Okay, and all those 3 things can be cured in one simple way, which I'll show you here in just a second. All right. How about this one in Google? Look at this stock. Very steep rally, and it goes vertical. And once these blue arrows stop printing, you have a beautiful opportunity to sell these out of the money call spreads. All right, you see that? Again, you can see the stock and then starts to stagnate. It actually even corrects a little bit lower. How about here at Amazon.com? And I'll show you in a second why I'm showing you this example, but you can see here very nice ascent, and then it goes vertical. Blue arrow shows up. Once the blue arrow stops printing, you have a beautiful opportunity to sell down money call spreads. Now, here's an important lesson with all of this. You see how this stock here ended up actually going higher again? Well, the stock had earnings coming up. So this blue arrow, this trade idea actually appeared only, a couple of weeks before earnings? It's not a valid signal. Okay, I'm not sure about that. I'll talk to you more about that in just a few minutes. So the way we find these trades is using the TST Vertical X Pro indicator and the scanner. And what it does, it finds these dramatically overbought and oversold stocks or ETFs or currencies, commodities, or even Bitcoin. I'm going to show you guys how you can use this in Bitcoin in just a second. Okay, and I'm not a Bitcoin Bitcoin advocate, but I'll show you how it works in that in just a second. Okay, so how does it work? Well, it's going to allow you to find these stocks that have vertical charts, okay? But it's very selective, and it works because it's selective. If it wasn't selective, it wouldn't be worth anything. It finds these super high probability steps where you can generate those income trades, those options credit spreads. It also forces you to develop a watch list, and it keeps you from buying or selling at the exact worst spot, okay? We'll show you more about that, what that means in a second. And ultimately, what it really does, it forces you to be patient and calm and collected. So here's how it works. So basically, what we get is a watch list, a scanner, and then I just kind of click on the scanner, and I'll show you guys this in real time in just a second, and you see if there's an overbought opportunity. So right now, this indicator works for a couple of different platforms. I'll show you guys that in just a few minutes. All right. So let me show you guys a few examples. And by the way, if you guys want to type in some ticker symbols to see if we can find some opportunities in stocks that you would like to look at, we will do that as well. So just type in your ideas. So for example, here's First Solar. This is the trade we're looking at right now. I'm actually probably going to buy this stock for a breakout for my members shortly. But look at look at the most recent ones, right? So you see how the stock had very overbought here. This was in October. And you can see how once the blue arrow stopped printing, we had a beautiful opportunity to sell these out of the money call spreads to collect income for at least a few weeks. Well, we then had a beautiful breakout, right? And which meant it was time to buy the stock again, right? All right, let's see what other stocks are you guys wanting to look at. Sure, Intel. Intel's a beautiful stock for this kind of thing. Look at Intel. Let's just pull, this is Sunil's asking that question, or Sunal. Look at when Intel last printed these blue arrows. See when the blue arrows stopped printing? It meant the stock was overbought and is now most likely going to at least consolidate or go lower. And as you can see, again, beautiful opportunity to sell out of the money call spreads once the blue arrows stop printing. Is everyone hearing me? Is anyone else having sound issues, or is that just one person? Sound is good? Yes, okay, sound is good. All right, so that's Intel for Sunal. Let's see, how about Craig wants to look at Microsoft. Here's Microsoft, all right? Here's Microsoft. It got very overbought here also in October. We had a beautiful opportunity. Again, the blue arrow stopped printing, sell out of the money call spreads here for income, right? And again, this is a rinse and repeat process. We do this, and this is ultimately, at least in my 20 years of experience and 15 years of doing this strategy, the only way that I've ever found that we can make money using using an option selling strategy on a monthly, quarterly basis. Look at, for example, Marvell, MRVL. This is the trade we did just a number of weeks ago. Remember we said we don't do this before earnings. Here we had an overbought signal. Well, the stock then went sideways. That's fine, but it was before earnings, so you wouldn't do that trade. But then, yes, it'll work in any asset class, guys. I'll show you Bitcoin in a second. Okay. Here's Marvell. Look at this. Once the blue arrow stop printing, again, you can have beautiful opportunity to sell out of the money call spreads, right? And it works over and over again. Let's look at, for example, let's see here. I don't know every single coin out there. Again, I'm not pretending to be a coin guru. I quite frankly don't really want to be. But let me show you here. Steve is looking at Netflix. Sure. Here's Netflix. Here's the last time Netflix had an overbought signal. You see this? Netflix overbought signal. You go ahead and sell out of the money calls. But now let's look at Bitcoin. Okay. It's I'm going to look at the Bitcoin tracker, which is BTC. This is the one I use to track Bitcoin. All right, look at this. You tell me. I'm just going to take the last few signals. Bitcoin got overbought. Again, this is a Bitcoin tracker. It actually works better on this than an actual Bitcoin itself. Stock was overbought, and then you would want to buy it on a breakout. Same thing here, overbought, and you wait for it to break out again at some point later. How about the last two, right? Here you get overbought, and then you would maybe buy it again on the next breakout. Right? It's all the same indicator. Okay. Here again, it got very overbought. So the last thing you would have wanted to do on this 18th of December is buy Bitcoin because it was overbought, right? Doesn't mean you have to, in this case, of course, you can't sell option spreads on this, but what I'm trying to tell you is with the indicator as it tells you when something is dramatically overbought, right? And if you use it for stocks or ETFs or some of the futures and things like that, you can use these income trades. If you want to use it for even something like Bitcoin, you can use this kind of thing. No, you can't do options of Bitcoin. You can't. There's a futures contract, and that's the only thing out there on Bitcoin. Let's see another one. Someone wants to look at ADP. Sure. Here's ADP. That's Michelle was asking for ADP. No, not Michelle. Michael. You can see the last time ADP got very overbought was here. Blue arrows, and you can see what happens. We have a very dramatically overbought situation, and you sell you out of money call spreads for income. Okay. Now let me show you the scanner how it actually looks here, so you can see this. All right. So like right now, here are the overbought and oversold scanners. So this is the when something is oversold, and this one something is overbought. So like right now, we're getting a couple. To me, these names aren't really dramatically interesting today. I mean, it's just the second day. But so Ren, you can see is overbought. You can see last time it was overbought. Here again, this is I'm just going by what's showing up today. Okay. So when this blue arrow, so RU, when this is overbought, you either sell out of the money call spreads if you want to generate income, which is what this webinar is about, or you then buy it upon the next breakout, right? So look at this. The next breakout happened here, and that's when you buy it again. Okay. Same thing right now. See, Ren is dramatically overbought. So right now, if you wanted to, once the blue arrow stops printing, you sell out of the money call spreads for income if you want to do that, right? Which is, again, that's what this web presentation is for. Or you can go ahead and just wait for it to consolidate and then go again. Like First Solar, right? I showed you just before. I forgot who was asking. I think Chris or someone was asking First Solar before. The last signal we got in First Solar was here. You see that? And then we waited. We either sold out of the money call spreads for income, which is what we did, or we did both. And you wait for it to finish consolidating, and then start buying it on the next breakout. Okay. Does that make sense, folks? Excellent. And again, all it is these two scanners. You look at every single day and see if there's an opportunity. Now let's look at a couple oversold signals as well. I know a couple of you people had questions on that. Let me just bring this over here and here. All right. So let's look at oversold signals. So for example, we had Celgene. It's a biotechnology stock, and this is Celgene. So you can see how the stock got oversold here. Would have been a beautiful opportunity to sell out of the money put spread to generate income, because once something gets this oversold, you can sell put spreads. Now again, this stock had earnings coming up, right? So you wouldn't take these signals, but as soon as earnings are out and you have a valid signal, then you can do that. And then we did this trade and we generate a beautiful amount of income. How about in Priceline? This is another just recent example that I remember. We had a dramatically oversold condition in Priceline, and it gave us a beautiful opportunity to sell these out of the money put spreads. Okay, so now we're going to go through a lot more of these examples, and I want to take all your questions. We have about, let's call it 10 or so minutes left. But what I do want to do is I want to offer you the Options Income Secrets course, okay, along with the indicator and the scanner, which is actually now available for a couple new platforms, or one additional platform as well. I'll show you that in a minute. So what this is, you're going to learn the entire monthly options income strategy. It's a low-stress, high-probability cash flow strategy. You'll learn how to do this using options the way the pros do, okay? And it's got a very, very high probability winning rate. You get the bonus ebook along with it, and you can pick it all up at thesteadytrader.com/income. Let me just quickly type that in here. And I'm going to go through all the details, including I'll explain to you more about the indicator in just a second. .com/income. All right, I hope I just sent that to you. No, I didn't. I sent it only to organizers, I think. Oh, here. Yeah, I'll go through all the questions you guys have on the indicator as well. So, .com/income. There you go. All right. So, okay. So, let's have a look at this. What's included in all this? Well, number one, what you're going to get is a brand new module in addition to the already existing course, which is called the Pro Strategy. It's the Iron Condor. A lot of people who do the strategy do it wrong or teach it wrong. I'm going to teach you how to do it correctly, the way the pros do, the way I do it for our advisory clients, our high net worth people, the way it's being done on institutional desks, and very different from what a lot of people try to teach you out there, because a lot of the stuff just doesn't work. Again, this is a way to basically double your options selling returns. Tabo, if you're not getting filled on your options, I will tell you in a minute why that is. It mostly is because you're choosing the wrong stocks that don't have enough liquidity in the options, and that's why we're very, very selective. That's why we use the indicator and the scanner to find the opportunities, only the ones that actually qualify, okay? But this is the only way that I've ever found over my 15 years doing this strategy that you can make money using an option selling strategy, and it's very, very, very consistent. You also get a personal mentoring phone call with me. If you purchase this, it's a one-time payment. Okay, this is not a multi subscription service. And you are going to get the bonus webinar. So the next bonus webinar, for those of you that, for the course owners and course and indicator owners, is going to take place January 25th at 11 a.m. Eastern Time, and it's going to be recorded. Absolutely, it will be recorded. And we'll be doing these once a month for the next few months or so. So you have plenty of time to acquaint yourself with the strategy to make sure it works for you as soon as possible. Now, this is not a course that's for people that would just want to kind of gamble in the market. I don't believe that's the kind of thing. If you just want to, be a thrillist, I think you're better off going to Vegas. But if you're serious about things in the market, and if you really want to actually make money in the market and generate income, I think this is a really, really good deal, and it certainly is working for me and my clients, and has been for many, many years now. Again, you're going to learn an options income strategy that is 89% profitable. You'll learn why people lose money using options, even though the odds are actually dramatically in their favor. I'll show you how to stop being the gambler and actually become the casino, which is what you want to do. We'll show you the odds of option selling, what they really are, and how that works. There's no monthly charge on this. I just said it. There's no monthly, just a one-time payment. We'll teach you the power of theta, okay, and how you can literally make money in your sleep or over a weekend or over vacation. It's not a trade alert service, although if you're looking for trade alerts on these kind of trades, stay tuned for about a month from now, where we're going to come up with a pure trade alert service. This is the course and the indicator if you want to actually learn how it works, okay? I'll teach you about the importance of implied volatility, which is going to have a dramatic increase in probability of making this. This is forever. If you pay this, it's forever. The course never goes away. The indicator is yours to keep forever. That's it. It's just one time. That's it. We'll teach you exactly where to take profits and how to risk manage these. I see a lot of guys asking this question, how do you risk manage this? Well, it's all in the course. Again, you get a personal phone call with me as well. You just have to set that up, and it's all there. So let me just now go into and tell you about the indicator a little bit more, so you can see how it works. So the indicator right now works for NinjaTrader, for TradeStation, for, I believe, let me have a look here. Right now it works for Thinkorswim, TradeStation, NinjaTrader, and TradingView.com is brand new. So we literally just started making it work for TradingView.com. So if you go to TradingView.com, which is free, okay, now the scanner doesn't work on there, but the indicator itself does. So if you want to go over there and have a look at TradingView.com, we literally just yesterday this came online, and you can see if you go to TradingView.com, all you have to do is create a free account on the website, then you can see it works as well. So for example, here in Boeing, you sell an out-of-the-money call spread once the blue arrows stop printing, and you collect the income, right, until you have a next breakout, and then you close that trade. So that's the gist of this. So again, it works for TradingView.com, it works for NinjaTrader, it works for Thinkorswim, and it works for TradeStation as well. And this is a one-time payment. So again, the basics of the principles of this is that we're looking to generate income on a monthly or a quarterly basis consistently. And you only can be able to do it if you're picky. You have to be picky with your entries, and that's what the indicator and the scanner is for. That's what the course is here for, to teach you how all this works. So let's go through some more examples so you guys can see that we're not just making this up. Some of you guys are asking other questions here, other examples. Let's see. Okay, sure. Best Buy. Lars is asking about Best Buy. You can see here is Best Buy. We had an overbought signal here in last year. You can see once the blue arrow stops printing, it's a beautiful opportunity to sell out of the money call spreads, right? And you can see, and you just do the call spreads and you collect income. Now, if you wanted to do this for a continuation trade, like for example, in like Bitcoin or whatever, then that's a different type of strategy, but it's the same indicator you can use for that. Yes, this is Bill. So the course teaches how to manage this. That's the whole point, and also the bonus webinars. So Bill is asking, does the course teach us how to manage this? Yes, and also the bonus webinars, dude. That's how we do the bonus webinars. So it's also an ongoing education, right? Even though it's only a one-time fee forever, it doesn't. You never lose access to this. Yes, absolutely. So which platforms are you using, or which platform are you using? On think TS, is that TradeStation? Yes. Okay. Yeah, there's instructions there, and you can also get on the phone with us if you need more help. So, Thinkorswim. Okay. Yeah, there's a super simple videos of how to install here. I'll actually show you guys. If you go into our clubhouse, I'll show you. This is our clubhouse. I shouldn't be showing this, but if you go into our courses, if you go into the indicator TSD Vertical X Pro, you'll see exactly what that looks like here. Okay, and you can see for Thinkorswim, you can download it, and there's a video of how to install it, and it's all there, right? You see that, JB? So and you get, of course, emails, welcome emails, and all that stuff. So that's all there. Now again, the indicator isn't just something that you need to. You can use it for other things. You can use it for generating these income trades, right? But you can also use it to do breakout trades. Like for example, I just showed you First Solar before, right? Let me go back to this. To this here. Sorry. I'll show you that trade in First Solar. So let's have a look at this again. So we go back to First Solar, right? So this is actually. So you can see here, for example, we had First Solar, got very overbought, and we then sold out of the money call spreads, and then we kept that on for a couple of weeks, took the profits, and then we sold and then we bought it again on the breakout. Yeah. So the next one is November. It's January. Excuse me, January. Well, we do these webinars about once a month or so, Bill, for the next few months. So the next one is January 25th, I believe. You guys will receive emails on this. No worries, Bill. Sunil, this indicator is not on TradingView. We are going to be well, it is on TradingView here. Here's a TradingView. You can't have access to it unless we send you the code. You won't find it anywhere. We have the code, as you can see here. Look right here. It's called Vertical X Pro. I'm going to send you the code, or my team will send you the code, because we don't want people to just randomly share it around. Does that make sense, Sunil? There's about 99.9% of indicators on TradingView are complete crap, to put it mildly, which is why I was hesitant to even go on TradingView.com, because there's so much just completely useless stuff. But that's it. So yeah, and again, I guess same thing here. So right, so for those of you guys interested in, if you don't have any other platforms, you can just open up a free account, it's just a login. There's no account necessarily. Type in, for solar like we just showed you, and you'll see these signals are showing up here just as well, right? So you can see here for solar overbought, solar money calls, but so on and so forth, right? So that's how that works, folks. I hope this makes sense. Again, I think the key here is to make sure that you understand that you have to have a strategy that generates income, okay? And if you don't have a strategy that generates income, it's very difficult for most people to remain active, active market participants. And I think that's the whole point here. And well, it's not. You can use this for the day, but I wouldn't recommend this as a day trading strategy. Okay, I look at the scans once a day for literally 2 or 3 minutes. That's it, right? So these are the scans right now. I'll see if there's something interesting, and that's it. I mean, it's not again, guys. We're not looking to day trade with this necessarily. We're looking to generate income primarily. That's the purpose of today's presentation. Now, again, you can use the indicator also for do breakout trades and things like that, right? Which is if you join the bonus sessions on the indicator. Like I said, we should do about once a month for the next few months. And then, yeah. Okay. Well, I scan it usually in the morning, JB. That's usually when I scan this. Does that make sense? So let's just go through a few more examples again, just so you guys can kind of see how this works. Apparently I have until 10:30, Eric, but thanks for asking. I was just told it's until 10:30. Okay, so let's look at a few more examples for those of you that were just asking about that. Let's see here. All right, what other stocks did you guys want to look at? All right, yeah, even like NVIDIA, right? So here's the chart of NVIDIA, right? Does anyone here ever trade NVIDIA or look at NVIDIA? All right, so here you can see here's an opportunity. Well, this is where you want to join us for the bonus webinar for, right? At the bonus webinars and for the and listen to the course. There's some points where it's better off just buying the breakout and not trying to sell out of the money calls bets for income. For example, here in NVIDIA, we had a big breakout taking place. And again, we'll talk about all this in the bonus webinars, right? That's why we do them for towards continuing education. Once we had that breakout take place, this would have been a better opportunity to buy on the breakout because this was already a big breakout. So you don't necessarily want to sell out of the money calls bets on this, right? Yes, exactly. That's correct, JB, to answer your question, yeah. So you wait for the next, but you put it on your radar. Again, this is what I'm trying to tell you guys. Most people in the market lose money because they're looking for immediate gratification, okay? And this is what you find with this, you're building a watch list for things to watch. Like, for example, in December, I believe it was, when I did this presentation in December once, we had Marvell come up on the radar. I think it was December, maybe November it was. And we had a couple on the radar. So once we saw it disappearing off the watch list, then we managed to put in a chip. But you have to wait for the blue arrows to disappear, right? And again, you also don't want to place these trades before earnings because that's basically just gambling, right? Does that make sense? This is, so Tabo, this is not a monthly subscription and it's not included with any monthly subscription. This is just a This is a standalone course and an indicator. I mean, quite frankly, I'm pretty much giving it away for 197 for it's an always. It's a forever thing. It doesn't ever go away, right? Or Intel, same thing, right? So I'll show you when Intel came up on the radar a couple months ago. I think it was November as well, or it was October here. Here's Intel again. You can see when the blue arrow stopped printing. That's when you start putting on well, you put on your watch list once the blue arrows appear. But once they disappear, so I make a little watch list, just like on a notepad or something, and I add the stocks on my notepad, and then I see once they disappear. And then you can sell your out-of-the-money calls, that's your income, or if you want to do a continuation buying trade, you can then go ahead and do the breakout trades, if you will. Does that make sense? Yeah. Yeah, so again, let's kind of review some of the basic concepts here. So number one, what's important to understand about all this is that you need to turn this into a monthly income generation machine. And you can't do that by trading weekly options. You can't do that by selling front month options. You do that by selling options a few months out. And the only way you can do that is if you're looking for things that are liquid, like Intel. I promise you, Intel right now, if you were to look at March or April options, whatever they have available, I don't have the table in front of me right now, that would be where there's going to be enough liquidity to sell options. Now, I'm not suggesting a trade because obviously in Intel because it's not a valid trade right now, but I'm just saying that's how you overcome the liquidity problem. Right? And again, you know, the key here that we're trying to do is we're trying to plan income ahead. So for example, for Intel, even though we put this trade on in early November, it actually ended up being income for the month of December, right? We actually ended up closing a trade as we started getting into some support here. Same thing for example, Amgen, which is a trade we put on also, I think this was October as well. You can see that how this stock kind of like it overbought. So we sold out of the money call spreads and we're planning income ahead. We weren't looking to immediately gratify ourselves with an income the very next minute, but we were looking to generate income through the lens of, you know, the next month or two, right? So we sold and closed this position in full. Actually, we got to keep the full credit for the month of, I think it was actually even early November is when we closed this trade. Right? So instead of looking for immediate gratification stuff where you're going to lose a lot of money over time, what you want to do is you want to build that income. The average millionaire has 7 sources of income. Okay, and a lot of the people that we advise and do the advisory and money management for, wealthy people, this is one of the strategies they apply in the stock market. Right? They also do other things. They also do real estate, do this and that. They have businesses, but this is one strategy that they apply. And the reason why most retail traders don't make money by selling options, even though the odds are dramatically in their favor, is because they're going way too close to the money, or they're using something like weekly options or selling front month option or just silly stuff like that. Who in here has ever done a weekly option and lost money? You're going to lose money using a weekly option because it's basically gambling. What happens on a weekly option on Friday afternoon if the stock is if the stock is sort of close to your strike price? It turns into a binary option. It's nuclear. Okay, so you end up sweating. I have spoken to countless retirees or semi-retirees or people who are just trying to generate using money income using weekly options, and they're sitting there on the Friday after expiration, you know, while they could be playing with their grandkids, but they're sitting there sweating out some stupid trade that some person suggested they do using weekly options, and they end up actually losing money most of the time, and then they have a horrible weekend. I mean, how fun is that, right? That's why we do it differently here. Okay, so Zarir is asking, how far out of the money do you sell the spread? Zarir, that's what the course is for. I don't have enough time left here to tell you all this because that's a discussion that's going to take about a half an hour at least. That's what we do the bonus webinars for. That's what we do. That's what the indicator's for. That's what the course is for. That's the whole thing. The answer is it depends on the underlying situation. It's not hard. Trust me. It's a very simple thing, but that's what the bonus things are for. And it's an ongoing situation. That's why we do these webinars on a monthly basis, the bonus webinars for owners. We're going to do on a monthly basis over the next few months. Because as markets change, so too do you have to adjust where to sell these spreads. Okay, it's not hard because what the indicator is going to allow you to do, I mean, the indicator alone is going to basically keep you from blowing up in the strategy, right? It's really, really, really hard to lose money in this strategy if you use the indicator alone. It's even just that in itself, right? And on top of that, you'll then additionally also learn how you can sell these options, where you need to sell them, how far out of money, which months to pick, and all that kind of stuff. And that's a discussion that takes, like I said, 30 minutes, maybe a little bit more to kind of explain that to you the first time around. Okay, so, but again, the indicator is here to show you dramatically overbought or oversold situation. Now again, it works in other things, like I showed you before. If you wanted to look at it in Bitcoin, right? I showed you Bitcoin before. This is a Bitcoin tracker here, okay? And you can see when it's dramatically overbought, you don't buy it. So the worst thing you could have done in Bitcoin, this is a Bitcoin tracker. It's the same thing as Bitcoin, except it acts even better. You see the blue arrow? What's the worst thing you could have done in Bitcoin on that day, which was December 18th? Anyone? What's the worst thing you could have done according to the indicator on that day? Which was, by the way, is basically the all-time highs except the next day. Right. Buying would have been the worst damn thing you could have done. Same thing here. Immediate term, what is the worst thing you could have done once the blue arrow stopped printing? Right. You wait. Now, something like Bitcoin, you can't trade options anyway, so this is not an options income strategy on Bitcoin. But what I'm trying to tell you is that the indicator will show you ways in which you can find opportunities that will keep you out of trouble. So if you want to trade Bitcoin or even the other coins, things I looked up like Ethereum or whatever it's called before, it actually works on that just as fine, you know. But it depends on the asset, right? So on Bitcoin, you don't want to generate income from that. That's a trading strategy. But then on something like we looked at Amgen a minute ago, right? That's when you get an opportunity here. This is where you would want to try to do an income strategy from this kind of a trade here, right? Okay, so let's look at. We have a few minutes left, so let's look at a few more. A few more ideas. Or a few more, let's say examples is probably the word. Okay. Yes, it'll work in indices, of course. Yep. I think I just talked about that for the past hour and plus. Yeah. Yeah, so what have you found, Tavo, after looking at it for 20 years? So how about Oracle? Steve is looking at Oracle. Oh, well, look at Oracle. Here's Oracle, right? So you can see when it was overbought, that's what happened. Blue arrow stopped printing, and you sell the out-of-money call spread. That's, Rob, that's what we just talked about for the past 55, actually no, hour plus is the strategy I just talked about. I don't know if maybe you just tuned in. Okay. Yeah, on something like an index, you know, okay, so here's the thing. On something like an index like the NASDAQ 100, you're not going to get a lot of signals in this environment right now because it's not going vertical, all right? No worries, Rob. No worries, right? It's going to give you an overbought, like maybe intraday, Bree, who is this? Oh, no, Joe, right? Yeah, Bill, I mean, options aren't that complicated. A lot of people make options very, very complicated. Right, and so for sure, that's something that that a lot of people will shy away from. But the problem is also that a lot of people use options in a very low probability way, which is why I do it. We do it this way. We teach you guys a course. We give you an indicator that you can use, like we just showed you an indicator to tell you when something's very, very overbought or very, very oversold, right? Sure. Let's look at someone wants to look at. I don't have a chat room. I have real-time trade alert services, Patrick, and things like that in Clubhouse service. Patrick, if you want to send us an email, just send us go to thestudytrader.com and send us a note there. Let's see. Actually, if you guys, for those of you that purchase right now, you get to take a $7 trial of my subscription service of the Clubhouse. Patrick, for those of you that are purchasing these, the reason for that is because I don't allow people in my membership services unless they have taken education, because I want people to actually prove to me that they take it serious, and so that's the reason for that. Yeah, sure. So let's talk. This is a good question as well from Hal. If something is oversold, Does it also show signals? Yes, of course. Good question. So look at, for example, Celgene. All right. So look at Celgene here was overbought, and we got the blue arrows, meaning you wait or sell out on any call spreads, or then in the oversold area right here after earnings. You see these orange arrows? It got very oversold, and you could sell the out of money put spread, right? Or Priceline. I showed you Priceline before. These are just recent examples that come to mind. I'm not picking picking where this. You can see Priceline oversold here, and you sell an out of money put spreads on that. Yeah. Yes. Yeah. You're very welcome, guys. I'm glad you find this helpful. Again, it's about generating income, and a lot of people have a really hard time generating income in the markets because they're either trying to day trade, which is very inconsistent, or they're using options a very, very wrong, or at least a very low probability way. So this is a way that allows you or forces you to be patient and really find the opportunities that are high probability. Like I just showed you, like I'm just going back to Amgen, right? So the indicator will show you when something's very overbought, and then it tells you that the stock at this point is most likely not going to continue increasing at this rate, which is to say that most likely it'll either go sideways or lower. And here's a bit of a bit of a tip. When you get these signals, the stock will tend to mean revert about 7% on average to the downside. So when you get these signals, okay, when the blue arrow stops printing, the average corrective period, the average, okay, is about 7% deep. It can be a lot more, like for example, you can see an Amgen, right? Here, I literally pick the top, right? But that's not the point of the, it'll do that plenty of times, but that's kind of like the bonus, right? So, so the point is that on average, right now in this low volatility environment, you'll see a mean reversion move about 7% to the downside when we get the overbought signals. And with that, folks, I think my time is up. I will hand this back to Dan. Appreciate everyone joining in. Again, very happy New Year. Hope you have a healthy, happy, prosperous, and certainly also a profitable 2018. If you guys have any questions, my email is support@thesteadytrader.com. And again, this offer is available right now. If you want to take advantage of it, it's a one-time fee only. There's no renewal on that. It's not a membership or anything like that. And of course, you get the indicator with that as well.